Ladies and gentlemen, welcome to the Fintech Frenzy live stream on an American holiday, Thanksgiving. Okay, that's exactly what Billy Jack just said as well. Happy Thanksgiving, all, even our Canadian neighbors. Which, if you guys don't know, our Thanksgiving is actually on October 9th. So I've been there, done that. That's why I'm here with you guys today. And obviously, maybe not a lot of people will be watching right now, but maybe tomorrow you guys could join in. So welcome the people in the future. Let's talk about SoFi versus Nubank. Okay, this is comparing what I believe is the biggest one-stop shop financial services company in America versus the biggest one-stop shop in Latin America, which obviously is Nubank in terms of digital banks as well. I also added in, just as a little surprise, Cash App. Okay. So I'm going to be breaking down this spreadsheet and talking about customer growths, comparing them all, revenues, revenue per member, customer acquisition costs, net income, and dilution of all those separate companies. Now, let's just jump in and we'll get started. Now, let me see. Let me make that a little bit more readable. Okay. If you're on mobile, you can also pinch zoom to see all those numbers, but I don't know where people are watching from. But anyway, now, as you can see, out of all of these companies, SoFi is by far the smallest company. Okay. In Q3 of 2020, they only had 1.5 million members. Now they grew that all the way up to 7 million during this time. Nubank also very impressive, 26 million up to 89 million. But probably on the slower end of growth is definitely Cash App, going from 34 million up to 55 million active users. Okay. So on Nubank's side, they do actually report active users, but that's total. SoFi does not report active versus, total signed up, non-churned accounts. So let me help visualize this for you by bringing up this chart right here. You can really see, let me also close that. It'll be better to see the full thing. There we go. Customer count trends visualized is extremely interesting. You can see how Nubank just pulls ahead unbelievably. Even though they have by far the most customers, it is not stopping the growth trend as well, also being by far the fastest. Okay. Cash App has been a large player. In fact, at one point was actually much bigger than Nubank, but now has been completely surpassed. And I don't think it'll actually take long for Nubank to double the amount of customers. They would need currently about 110 million, growing at quite a fast rate, a little bit slower recently compared to trend versus some of these periods in 2022, where they were by far skyrocketing past. But obviously we're entering into new geographies in Latin America. So, slows down a bit. SoFi, it's hard to see a lot of the growth. In fact, they are growing much faster than trend right now, but it's such a small bar that it just looks like it's witty bitty at the bottom. Okay. But here's the thing, is that even whenever looking at population difference between Latin America and the US, obviously there's nearly double the people in LatAm, and the affluentness of the clients in LatAm versus US definitely leans drastically in favor of the United States. On top of that, whenever you compare a company like Cash App, which leans more towards the lower end of the spectrum of affluent clients versus SoFi, then you get to see another gap, right? Affluent versus sort of below minimum income middle wage. Now, if we look at customer count growth rates, what we can see is that SoFi is actually holding up the fastest growth rates as of recently, at holding up about 11.5% quarter over quarter. Just below that is Nubank. I don't know why I can't hover it. Come on. 6.45, and then down at the bottom, Cash App at 1.85. So this is one of the interesting things as well, is that whenever looking at stocks, it's not about picking the biggest company, or else Apple would be by far the fastest growing stock to hold, right? But essentially what it would also be is the difference between when you bought it to how fast it's growing, and then also how fast it's determined to grow, which would essentially be the alpha or the surprise versus what the consensus was saying previously. And right now, we'll talk about consensus for SoFi, but it's not nearly as good as these two other banks, or fintechs in general. Now, customer difference between new and SoFi, which is in this blue, is as a percentage, okay? So what you can see is that if we go up to the top here, new had 17 times more customers, or 1,739%, more than 17 times. That has now dropped to just 12.8 times as many customers, okay? So that trend is on the way down. It's even more drastic whenever you compare Cash App to SoFi, at one point being 22 times higher to now only being less than 8 times higher. And then obviously the customer difference between new and Cash App are probably the most exciting ones here, going from just 77% up to 162% in the favor of Nubank. Very, very exciting. Now, let me take a quick sip of water, because I always find with these videos, they're always super long. So I try to get everything in super quickly, but there's a lot of information to go through. So does Nubank have restrictions for cryptocurrency like SoFi? No, in fact, actually, they just talked about how they added 10 new coins just this year alone. They're actually expanding their crypto offering. And they also have a coin of their own called NuCoin. NuCoin. Okay. Revenue for SoFi has gone from 200 million up to $530 million. In this same breath, Nubank's revenue has gone from 156 million, much lower than SoFi's, up to 2.1 billion. Quite a change in revenue there. Cash App's revenue, 466,000 up to 466 million up to 1.2 billion. This is excluding Bitcoin, okay? Because obviously that's just going to change out a lot of the numbers. It's going to make it look like this is the most revenue heavy company in the world. However, they just hold the crypto on their platform for milliseconds, and in fact, they have to count that as revenue, even though it's essentially not. Okay, revenue trend. What you can see here, Nubank once again pulls it out, growing insanely fast. But revenue is one thing. Like I said, monetizing that revenue, how much you can actually bring to the bottom line, is a different story. And Cash App has had its sort of waves going down in certain areas, exploding in other areas, and SoFi has just been on a very linear path. So, but not as explosive as Nubank. It's getting disgusting. Nubank's 2.1 billion versus 530,000, which at one sorry. Let me go back. If you look here, they actually had lower revenue than SoFi at one point. Now it's like an unbelievable number, more than 4 times larger. It's just crazy. Absolutely crazy. Revenue difference. This just shows you the percentage differences between the two. Like I said before, SoFi has been lower. Now it's been higher. This gives you sort of a great chart to see how they've been compared to each other. And then revenue growth rates, obviously, is some of my favorites, where you can see that Nubank at 4.35%, by far the fastest, then SoFi at 4.5% in the last quarter, and then Cash App. Does it actually say it's dipping? Yeah, 0.23%. I'd forgotten about that. This is why we review the numbers. Yeah, wow, crazy. Okay, on to revenue per member. Let's compare the two together, sort of revenue and member counts. SoFi has gone from sort of being a lending business over to also including, financial services, which are less of a monetizable thing, at least on a per quarter basis. Over the length of the lifetime of the client, it can actually be, consistently monetizable. And so the lifetime value, or the LTV, can be much, much higher than lending, but it takes a long time. It also doesn't show up whenever you look at it on a quarter over quarter basis. On Nubank, on the other hand, had went from just being a single product company to then branching out to 2 products, to now branching out to about 9 different separate product categories with tons of different products within them that they've developed. I think they even said they developed something like 40 new products just this year, or just year to date, which is just absolutely unbelievable. And Cash App is no slouch as well, going from $13.73 revenue per member all the way up to $21.93. Actually, in fact, last quarter was a little bit higher, but that's just a matter of them dipping a little bit in revenue and also adding 1 million new customers in Cash App's favor. So across the board, they're trying to add new monetizable features, add new products, expand sort of the monetization rate of all of their customers while adding. It's what I love about fintech. You get to see this amazing feat here. So right now, you're seeing SoFi's revenue per member trend on the downside, but it's not actually because we're monetizing users less than what we previously have. It's just because we have so many more members. And for example, we also have a product line that Cash App and in a way, Nubank doesn't either, is something like SoFi Relay, where we can take on a huge majority of clients through that product stream. And in fact, it's one of the fastest growing products at SoFi, if not the fastest. And it's just not monetizable on a revenue basis right now. Potentially, it could lead to new lending members, but then it wouldn't even be essentially called revenue towards Relay. It can cross-sell into other products, but it's not actually Relay specific. Once again, Nubank holding up by far the fastest growth rates in the latest quarter, then just a little bit etching it out SoFi, and then Cash App actually both being in negatives rather than Nubank's unbelievable growth rate in revenue per member. And by the way, also bringing on the fastest rate of new customers and also bringing in the fastest rate of monetizing those customers in terms of growth rates. They truly are a beast. Truly are a beast. Water break, and I'll read some questions. Happy Thanksgiving. Get that turkey. Nubank is crushing its biggest fintech holding for me, then SoFi and PayPal. I have it a little bit mixed around. I got SoFi, then Nubank, then PayPal. So, okay. Customer acquisition costs. Let's take a look at this. I wish I could add PayPal to this. However, they just don't break down their numbers as well as these other companies. So I can't really compare them apples to apples, unfortunately. And also their digital wallet's such a small percentage of their business versus just overall payments and checkout. So it kind of skews the numbers. As well as like SoFi, for example, I took out the revenue per member for, the tech platform. I did it for Cash App as well, taking out, sort of Square seller and just looking at the actual fintech sides of these businesses. Nubank is full on, they do banking, right? So a little bit different there as well. Customer acquisition costs. What you can see is that customer acquisition costs for SoFi has been kind of on the up and up. They haven't really been focusing on customer acquisition costs all the way until these last 3 quarters. They did $384 per user, then $300, now $250. Okay. They said they don't really try to focus on customer acquisition costs. What they really are trying to do is just make sure that what they're acquiring for a user is still adequate for how much lifetime value they're going to get from those customers, and that the payback period on those customers is about 12 months now. That actually dropped from 18 months. Significant advantage, okay? On the other hand, however, Nubank is just a completely different beast. What you're seeing is that whenever you look at CAC to ARPU ratio for SoFi, about 26%. So that means that, like I said, they'll pay off that customer in about 4 quarters, 26% almost. You're leading just a little over 100% at that point. But with Nubank, even in some of these other quarters, like 478% 2 quarters ago. Okay, so you're talking about you can acquire a customer for $5 and flip that customer around almost 5 times in a single quarter. Okay, so it's not a year payback turnaround. Like now it's still almost a month, not 12 months, a month, and that is even more exciting on Cash App's perspective. They can acquire a customer for $4.52 and pay off that customer in nearly, like, not even a month, a couple days. You're talking about like 15 days or 18 days or something like this. Just rough math really quickly. But then I also did all of the CAC differences between the two companies, and then their CAC to ARPU efficacy, meaning how fast they can actually acquire and pay off a customer. And essentially that looks something along these lines. So wait, let's look. Customer acquisition cost is here. SoFi has a completely different acquisition strategy than these other two fintechs. That's why they're all the way down here. If you were to compare SoFi to more traditional banks that do look at it on a LTV to CAC sort of perspective, similarly to SoFi and acquiring high-end consumers, you can even get customer acquisition costs above $1,000. So it starts to look a little bit better once you start doing that. But Cash App and Nubank have definitely hit the lottery on virality. And then let me just make sure. Yeah, okay, good. Customer acquisition to ARPU ratios, and this is how it looks like. Obviously, Cash App has taken the lead in these past 2 quarters. Nubank a little bit falling as they've had to pay a little bit more for their consumers because they kind of have a saturation problem. If anything, they have so many customers at this point, as you can see from this chart right here, that there's only so many people in Latin America. And so the majority, high majority of these consumers are actually just in Brazil, and they have a relationship, a banking relationship with 51% of all of Brazil. Okay, the adult population at least. And so for them to acquire new users at this point will probably head down until they break into their bigger not bigger geographies, but other geographies like Mexico and Colombia, both going to happen in Q4, but very, very hard for them to grow whenever they're so saturated. On the other hand, SoFi, all the way being in a completely different category, however, heading up in these last couple of quarters, it is still hard to compare them. Now, really quick, before we look at this chart right here, I want to take a look right here. This is their customer payoff trends. Nubank versus Cash App on the side here, then Cash App versus SoFi, then Nubank versus SoFi, showing you which one actually does better. So in the CAC difference of Nubank versus Cash App has been able to acquire a customer for about 190% more efficiently than Nubank in this sense, okay? Which is actually making Nubank only get 57% of the reward that Cash App would get in that same instance. You can see that across Cash App versus SoFi. It looks very crazy whenever you compare it like this, that Cash App, like SoFi is only seeing about 1.8% the reward that Cash App is seeing on a acquisition to real revenue efficacy point. Crazy, I know, but just completely different strategies. And then Nubank versus SoFi as well. All right. So let me bring up the last one or not last one, actually. I got net income. SoFi has not been profitable, however, wanting to break that streak next quarter. Block's net income, I don't think that they're expected to be net income positive next quarter, but they do expect to be net income positive throughout the full of 2024. It'll be a big year for them. But Nubank, on the other hand, since Q3 of 2022, which means 5 straight quarters of profitability, has gone from high negatives to almost $8 million of net income, 58 million, 141 million, 225 million, and latest $303 million in news net income. Okay. Let's visualize that out. Where is it? Here. Just to see how all of these companies compare. So right now, so far, SoFi is the furthest away from profitability. However, they are going to break it next quarter. Block is at very, very close, 98.94%. 100% would be profitability. And Nubank has already broken that streak, already at 114%, still climbing. Very, very good. Now, last but not least, dilution. How much is happening in the year or in the wake of stock-based compensation? What you can see is that SoFi has been continuously giving lots of stock-based compensation. However, recently, going from their height in Q4 of 2021 all the way to now, they have been consistently getting better and better and better, down to 11.68% of stock-based compensation as a percentage of revenue. I'm going to skip Nubank really quickly and show off Cash App, which they've been doing quite the opposite, actually climbing as a percentage of revenue. They said that they actually want this to plateau next quarter and then consistently head down in 2024. I feel like they've been saying that, so we'll have to hold them accountable for that. But Nubank, on the other hand, it's not actually that their customer acquisition, or sorry, stock-based compensation has been going down too crazily. I mean, in some quarters it has, from Q3 to Q4, then to Q1, constant going down. But then it started to head back up. 59 million, 66 million, 73 million. That's looking fine. But they're growing the revenue so fast that as a percentage of revenue, it's literally 3.42%. This is like growth rates even lower than PayPal, and yet they're one of the fastest growing fintechs in the entire world. And this is how all of their charts look. Okay. SoFi doing exactly what they should be doing, decreasing as a percentage of revenue, trying to decrease on absolute terms. Nubank, not worried about dropping as a percent of absolute terms, but growing the company so much faster that the red line continues to drop. Cash App just doing everything wrong, increasing stock-based compensation, increasing it as a percentage of revenue. They say they'll fix that. They better. These are all of the statistics whenever comparing SoFi versus Nu versus Square. Now, let's talk about valuation, because that makes all the difference. Okay. Now, valuation. Let's give this a big zoom. Market caps. Nubank and Block, very similar in market cap, nearing $40 billion, 38.4, 36.2 billion. SoFi, a completely different bracket, 6.6 billion. Tiny little baby company compared to these two. On a forward EP or PE ratio, which people were typing me, oh my God, how could you buy Nu? 500 PE, 500 PE. Okay, well now their PE is 100, and next year it's expected to be 24. So it got cut into 1/5 in a single quarter, and it's going to get cut by another 4 times over the next year. Just saying. So people don't understand growth rates and don't worry too much about current PEs rather than forward. Block at a forward PE of 21.6 times, and the forward PE ratio for SoFi is 115. However, they haven't even had a single quarter of profitability yet, so PE could definitely be high. Wait till that actually kind of gets cycled out. Their net income margin won't even be, it'll practically be in single digits the first quarter. They want to get that all the way up to 20%. So the margin expansion is going to be unbelievably crazy. This ratio will also get down. It's just SoFi is in their early innings rather than these two more mature companies of Nubank and Block. And for Nubank, it's a little bit different as well, because whenever you say mature, it's like, okay, it's even a younger company, but obviously they've done some spectacular things in an environment where people didn't really think that they could operate well, and they did. So price to sales ratio, 3.36 times for SoFi, Nubank at 5.43 times, and then Block at 2.98 times. Very good for all of them. Nubank looks like it's the most expensive. However, obviously they are growing the fastest as well. Take that how you will. Price to book, 1.3 times for SoFi, being the bank that it is. Block at 2 times, and Nubank at 6.6 times. That's going to hold back some investors. I would not actually look too deeply into it, as the growth rates and this company is so amazing. But it will definitely hold people back if they're looking at it as just a bank. Held by insiders, 6%. 9%, very exciting on Nubank's point, and Block at 0.8%. Held by institutions looks the complete opposite of how the insider holdings look. SoFi at only 35%, Nubank at 68%, Warren Buffett being one of those holders, and Block at 72.5% and only being shorted 2.9% of the time. The shorting of Nu is at an all-time low versus these competitors. Not actually the all-time low for the company. It was a little bit lower actually last quarter. And then SoFi being extremely high at 12.25%, as I believe that people are drastically underestimating or understanding this business. And then total cash, 2.9 billion, 3.3 billion, 6.3 billion. debts 6.3 or 6.4, 1.3, and $5.4 billion. These are the valuation metrics that I took for these three separate companies. These are the growth rates that I'm looking at for in terms of comparing them as fintech companies. Okay, so this doesn't actually take into the full business that SoFi has. They also have a tech platform. Cash App also has their Square seller platform. That does make an absolute difference. Nubank is the only one that's primarily a bank as well. Okay. Revenues, revenue per member, customer acquisition cost, net income, and dilution. Visualizations, all of these charts to show you guys and let you pick which one that you believe is by far the best fintech out of them all. Now, I wanted to mix it up a little bit because we got 5 minutes left before I leave you guys here today. I wanted to just talk, and there's not a whole lot of people here. Obviously, it's Thanksgiving, but if you guys stuck around, I'd like to talk about something that is important. Yesterday, I had a conversation with Chris Hager about whether or not SoFi is going to become capital constrained. And it was a great conversation. However, we didn't address the elephant in the room, which a bunch of people were commenting, and even afterwards, still I'm getting a bunch of comments in the comment section about this, where they're saying, "Hey Tanner, why didn't you talk about SoFi's deposit growth? Because obviously, as SoFi is growing their deposits, they can lend out that much." Okay, let's address that. That's not necessarily true. Think about SoFi's requirements as a bank as being a multi-criteria or multiple checkbox list for whenever they can actually grow their loan book. Okay. Yes, deposits are very good, and as they grow, that there's more capacity to lend out. But there are other things that SoFi has to look at, like their total risk capital, which I think right now it's 14.5%, and they don't want it to get below. Well, the minimum is 10.5%. Chris Hager believes because the difference between tier 1 and tier 2 capital, that really we don't want that to drop below 12.5%, because I think it's like 8% for tier 2, 4.5% for tier 1, or maybe that's backwards, I forget. But essentially, deposits are not assets, okay? They're liabilities. And so as we grow our deposits, it doesn't actually make SoFi's bank capital look any better. Okay, what we actually need is things like our tangible book value to go up, so we can get real things like common equity and cash and things that the bank can look at to say, hey, these are secure, these are very low rated risk assets, and okay, we'll let you take on or we need better capital in order to actually lend out more assets. Depending on the risk of the asset, then we can lend out more. Obviously, unsecured personal loans are by far the riskiest, so you can't actually lend out very, very quickly. The risk-rated assets will go up drastically quick the more personal loans you actually take on. So think about it on a sense of whenever SoFi gives out a personal loan, okay? Sure, you can have a FICO score that's over 750. You can have 800, and still you will be declined on a SoFi personal loan. But it's because there's other checkboxes that they need that you don't actually apply for. Okay, so they're looking at cash flow, they're looking at average incomes, they're looking at all of these different things. But just because you have one, which in this case your FICO score might be the same as deposits, it's not enough, because there's other requirements in this Basel III Accord, which is this global standard for large banks that they have to adhere to. Okay, so it doesn't matter that deposits are growing. In a way it does, because it'll still lower cost of funding. It'll still, make so then their net interest margins continue to climb, and then they can also make a little bit extra money with that, and then also supply more capital in that sense. But it's not necessarily the only thing that's stopping us from lending out more. There's a ton of things at play. It's just important that there's a reason why we weren't having a discussion on how fast deposits were growing, because that's not the concern right now. Anyway, I hope that sort of clears it up at all. But yeah. It was great. I was wondering if you could explain the stock-based compensation numbers in layman's terms. Okay. What part about it? do you want to know? Because stock-based compensation is just another way that a company can issue their employees or executives more money without actually dishing out cash. So essentially, if you're just dishing out common equity or like common stock of their own company, which would just be the shares that you and I might hold on to for SoFi or something, that they're not actually taking away from the business. They're taking away from other shareholders. So there needs to be a good balance, but it's another extra way of compensating shareholders, but not actually having to dish out cash. I hope that helps. And funny enough, the way, just because I know this from being in the game a little bit, is that employees don't necessarily just want everything based on cash. For stock options, it might be that case, but it's really funny how a certain company can spend something on like employee benefits, and in a way, stock options are an employee benefit, that it will, even on a dollar per dollar basis, will be more exciting for the employee that they have $1,000 in dental rather than just $1,000 increase in their salary. It's very weird, but it's more of a psychological thing rather than a financial thing. But stock options are a little bit fall under that criteria as well. People want to know that they have stock options rather than if you just got a salary increase. Observation: I believe New has fewer competitors for Latin America. Oh, 100%. 100%. Tanner, does Nubank have a tech stack that they sell as a service? No, they do not. No, they do not. I think they've spoken about it, but no. I do believe they have one of the best tech stacks in the entire fintech game, but no, they don't sell it. I think literally they want hundreds and hundreds of millions of users, and they'll go to Africa to get it. They'll go north into America to get it. They'll go to Indonesia to get it. There's been a bunch of places that they've spoke about. And yeah. I was hearing large percent, but numbers. So as a percentage of revenue is just a simple way of breaking down, like stock-based compensation on a number basis doesn't tell you the full story if you don't understand the market cap of the company. So one of the ways that people compare it is just as a percentage of revenue, because if a company is dishing out really, really fast growth rates and also high stock-based compensation, it might be acceptable because, you know, fast-growing companies, you know, the employees that are working so hard to find that great growth deserve higher rewards. So it's just another way that people compare stock-based compensation. In a few words, without full research, how would you compare Stone to these numbers? So Stone is really hard. They have a bunch of different financial service products, so it's really hard. And the newest one that they just recently launched, I think it's called, no, I'm gonna mess it up. It's Stone-a-tone. I forget what it is. I'm gonna look it up just because I'm interested. But it's so new, and a bunch of their products have such scattered numbers that it would be hard for me to put it all together and get average customer numbers. And so I thought about adding it, but really couldn't in that way. At least on the banking side, because that's all we're doing. We're not really comparing the, you know, selling numbers or the tech stack numbers, or you know, the tech side platform for SoFi. It's just the fintech side. And StoneCo has gone through so many different iterations of that I don't think it would work very well. All right, ladies and gentlemen, I'm going to get going unless that's it. I tried comparing PayPal to it. I was going to add Robinhood in here as well, but didn't really think it fit into these three. If you want to see the SoFi versus Robinhood one, I've done that previously. But aside from that, thank you all so much. Really do appreciate it. I'm going to try to get this full fintech or full SoFi video out soon. I think I might just set a date for myself like a month from now, and then just force myself to work as hard as I can to get it done. But yeah, I keep changing what I want to add to this service, and I'm just freaking going crazy trying to figure out, like, you know, all the different aspects that I can make this video even better and better and better. And yeah, just making the project too big. And I don't want to make I don't want perfection to stop me from ever posting it, but I am being a little particular. Anyway, thank you all so much for watching. See you guys all tomorrow. Bye for now. Happy Thanksgiving.